But we have our first management with us. KEC International is joining us. The impact of the West Asia situation continues to impact KEC. It was the situation in Q4, and I think that's been what has happened this time around as well. Mr. Vimal Kejriwal is MD and CEO of the company. Mr. Kejriwal, good morning, sir. Thank you for joining us. So revenue growth is a little muted. Margins have fallen sharply to about 5.8% from 7%. Despite some moderation in raw material costs. I just want to ask you to describe what happened, because I remember when we spoke after Q4, and that conversation was in May. One of the things which stuck with me was that labor shortage. You said your requirement is 30,000 people, and you were working with 15,000 people. So there was a big labor gap. Has that persisted through this quarter, and has that been responsible for the muted set in Q1?
So, Prashant, good morning once again. I think there are a couple of factors. I think you have covered two of them. That's the West Asia, and second, obviously, is labor. So, as far as labor is concerned, I think throughout April and May, the labor shortage persisted significantly. Okay. June onwards, people started returning. So now we are, I'll say, almost at 90% of our requirement. So June, July, it's picked up significantly. We'll be still short of around 2,000 people or so, but I think that's manageable. I think those are the two major issues. And third one, which we have been discussing, is the payment issues in water, which continue. So that impacted water. So these are the three basic issues because of which we had a flat, revenue growth.
So April, May was bad. June, you got back to 90%, and now it is getting better and better. So July also.
Yeah. Yes.
So Q2, you should be in a much better shape, right? I mean, labor should not be a problem.
Yeah, on the labor front, so the civil business and to an extent in India, T&D, mainly I'll say the civil business is picking up now in terms of revenue.
Okay. And just talk to us a little bit about that margin drop as well. What caused it? I thought there was raw material costs eased up a little bit.
So raw material costs have started easing up. So that you will start seeing some impact in Q2. I think April, May were pretty bad. Also, if you look at items like fuel and power, both in India as well as Middle East, what's happening is that we are talking to clients, etc., but the costs are being incurred today. So all the costs are getting booked in the accounts today, and unless and until the client gives you a claim or something, they'll continue to hit your number. So I think the basic issue was raw material. I'll say also logistics. Logistics have gone up threefold. So that's another item which has hit the balance sheet or the P&L.
You mean shipping? Is that what you mean?
Shipping as well as inward logistics. If you take a trucking cost, etc., and shipping and the trucking cost in UAE and Saudi has gone up significantly because the fuel prices have almost, I'll say, doubled there in West Asia.
When will margins normalize, Mr. Kejriwal? If you can give us a sense.
I think, to me, one is we'll have to wait for West Asia crisis to settle. That to me, and how the logistics, etc., and the supply chain pans out. Because even today, the issue is not the execution on the ground. The issue is your supplies are not happening. Europe, China, even from India to that market. So once that starts normalizing, so I'll say Q3 probably.
Okay. And in Q3, margins get to 7-8% or even higher. When we talk about normalization, what are we looking at, Q3?
I think we should be talking between 6.5% to 7%.
Okay. So what about the top line growth? 12 to 15% was the guidance that you had shared last year, with order inflows at 30,000 crore. Are these two on track?
Order inflow right now, we have got around 6,300. We have L1s of 3,000 crores. So I think order inflow should happen. Margin guidance, not margin, the revenue guidance, I think 12 to 15, we are still sticking to it. Maybe closer to 12, then to 15. But I think we'll wait and watch because as I've been maintaining in EPC business, the revenues just get deferred. So it will depend upon when the West Asia crisis settles. If it settles right now, then probably we can even go up to 15. But I think we are still okay with that guidance.
Got that. And sir, on debt, you had spoken about reducing your debt by 1,000 crore rupees. Now, considering so much uncertainty, is that on track? And what is your net working capital guidance by Q4 FY27?
So we are still on track for that. If you look at Q1, we have reduced by 150 crores. We expect to reduce it by at least 200, if not more, in Q2. So 5,500, 600 crores guidance for March still remains there. Net working capital, I think, is around 134 days or something. So for the year end, we want to bring it down to 120. We have a couple of lumpy payments which have got deferred. We have got an Afghanistan large payment of 300 crores and odd, which is to come from multilaterals, which has not happened in Q1. I think it should happen in Q2. So I think we are pretty okay with our debt guidance.
Okay, all right. Hi, Mr. Kejriwal. Difficult quarter, nonetheless, on the operational front, order inflows, payments as well. You briefly mentioned about payments as well, right? How have things moved? Has July been better than June? If you could give us some clarity out there. What is the total outstanding payments? And are things improving gradually?
So you're talking about water, I presume, Nigel?
Yes, water.
Yeah, so water Q1 was not that good, but in Q2 beginning, I think till now, from 1st July, we have got more than 100 crores of payment, which is quite significant considering they've been paying around 50, 60 crores per month. We have spoken to the government, all the powers, and they have said that yes. Okay. So I think it's improving.
So 100 crores you received, and prior to that, what was the monthly run rate you were going at?
Monthly, we were getting roughly around 50 crores. So
it's improved. And the total outstanding is how much, sir?
So gross billing, I think, is around 800 or 900 crores, but what is actually billed would be around 400 crores. So we have to have a 400 crores outstanding.
And you mentioned that 300 crores is from where? It's pending from where?
Afghanistan.
No, Afghanistan, we had two projects where we have to get the money from ADB. We have got letters and all confirming they'll pay, but the payments have been getting deferred for whatever reason. So I think hopefully this quarter we should get that money. And there are no outflows. There are no outflows against it. So it goes straight to debt reduction.
Right. So 400 crores should come in. This is from the project in Afghanistan.
300. Yeah.
Sorry, 300 crores should come in.
Yeah.
And the 400 crore number is the water business, which is outstanding from the government here.
Outstanding today. Yeah.
Okay. So putting all of this together, when will I look at where the the share price is trading? I mean, it's kind of sort of factoring in. If I look at FY28 numbers for a business like yours, a high quality business like yours, is trading at 14, 15, 16 times earnings. When will things start to turn in a meaningful way? When does all of this come together? You're looking at the bigger picture as well, right? There are all these pieces. There is the water bait, there is the labor bait, which now perhaps is falling into place. What's your guidance, sir? What's your message?
So, Prashant, what's happening is water, we are running down our unexit order book. So we should be close to around 1,200, 1,300 crore order book. So I don't think it's a worry for FY28 or so. I think by end of FY27, we would have run down that. We need West Asia to normalize because what's happening, there's a large tender pipeline. I think almost 30, 40,000 crores in West Asia. Tenders are happening, but they are still not getting awarded. So once the revenue start coming in, also, we saw in last quarter, I'll say Q4, etc., there was a slowdown in the India T&D award, which has started now happening. So I think the biggest joker in this whole pack would be how quickly India T&D ramps up. How do we take care of ROW issues? As far as FY28 is concerned, we have talked about 12 to 15% in FY27. I presume that we'll do at least a 10% in FY28. So we should be around 30,000 or so in FY28.
I see. Got that. So, but your guidance for 27 remains unchanged, right?
As of now, yes. I think we should be able to match it.
All right. And 28, you're saying that you see about 10% growth.
See, as of today, we are saying that let's see how the order book and all that happens. Depending upon that, 10 is, I think, given because today we have an order book plus L1 of more than 40,000 crores. So even if we do 26,000 now, we'll still have around 10,000 or whatever number is there of the order book available to us. So I don't think 28 should be a challenge at a 10% growth. No.
I see. Last time you were on, you were also talking about some 3,000 odd crores of orders, which you were kind of, participating in, which you were hoping to hear. Has anything moved there?
So we have got some of them. But as I said, that West Asia has been a slow in awarding of orders. So I think we have got around 1,000 crores or so L1 in West Asia for, I think, maybe 3-4 months. Hopefully, the discussions are now on. We should get them. But it's been a moving thing. So we keep on getting more orders and we keep on getting more L1s.
Got that. Mr. Kejriwal, thank you very much. Appreciate you joining us here on CNBC TV18. And always a pleasure.
Thank you so much. Thank you for having me.
Okay, we'll take a quick commercial break here.